Ladies and gentlemen, please welcome to the podium Mr. Hal Quinn.
Thank you, and good morning. As I just told you, I'm Hal Quinn. I'm the president of the National Mining Association, and we're the proud sponsors of MINExpo 2012, the largest mining show ever. Now, appropriate to this event, we've assembled a very authoritative lineup of industry experts for this morning's panel discussion on the global outlook for mining. Now, all of today's participants have asked me to dispense with the long introductions. I refer you to the program at your place for the background on each of them if you don't already know about each of the leaders of the industry that are up here today. But it is my pleasure to introduce our moderator for today's discussion, Dr. Jeffrey Garten. Dr. Garten is the Juan Tripp Professor for International Trade, Finance, and Business at the Yale School of Management. So please join me in welcoming our moderator, Jeffrey Garten.
Thanks a million, Hal. I am totally delighted to be here today to moderate what I think is going to be a fascinating session. We are going to be treated this morning to really a discussion that reflects the confluence of at least two really big things. The first is we're going to hear a lot one way or another about a world that is filled with enormous uncertainties, enormous perils, and enormous opportunities. And we're going to hear that from four very prominent and highly experienced executives who I think can help us make sense out of this very complex situation. You have their bios, so I won't do more than just introduce them. Richard O'Brien, CEO of Newmont Mining. Red Conger, president of Freeport-McMoRan. Greg Boyce, chairman and CEO of Peabody Energy. And Mike Sutherlin, president and CEO of Joy Global. We're going to hear from each of these men in a few minutes. Then we'll have a little discussion on the stage, and then we'll look forward to answering your questions. But I thought I would just kick this off by making a few comments by way of trying to frame the discussion. We're going to hear today about the outlook for the global economy, the long-term commodity cycle, strategic challenges facing the industry, and a lot of key trends, whether they be resource nationalism, corporate consolidation, innovation and productivity, environmental trends, or trends in corporate social responsibility. But what I'd like to do is attempt to get a little bit above this and just throw out four factors which I think are highly relevant in thinking about the background to all the issues in the global mining industry. And the first trend that I would like to just briefly identify is what I would call changing geopolitics. And I think here the key point is this. We are in an era, in my view, of a slow but steady dissolution of the US-dominated global economy. We all know about the rise of big emerging markets. We're familiar with the actual breakdown of whole regions, whether it's the European Union or the vast span of Arab countries. We're conscious that many of these countries are experiencing a kind of unpredictable nationalism and populism. But here is the big question that we face. Are we seeing a slowdown in the momentum that we have been used to in the expansion of an open global economy? Will that openness continue to grow? Second, in this new world, will the rules of trade and investment and currency trading, will they hold up? Or without the U.S. at the center, proposing the rules and attempting to enforce them, will we see a withering? And finally, will governments be able to cooperate sufficiently to patch up a lot of the problems that are going to emerge in a growing centrifugal political world? I think this changing geopolitics is going to influence the prospects and the strategy of every major global company. The second big trend is what I would call the change in the global economy itself. There are a number of things that have been going on, including the growth of globalization, and including spectacular advances in technology, particularly communications technology, but not limited to that. And I think that it's very possible that we are also on the verge of a great third industrial revolution. But there are very big questions that cannot actually be answered now, or put it another way, where there is no consensus among the experts. The model of the world economy has really been demand in the industrialized world and supply from developing countries. It is likely that this pattern, at least in its intensity, is no longer sustainable. And the question is, can there be more balance? What will it take to get that balance? And what problems lie in the transition? We have been used to a world in which global finance has steadily expanded. But now the global financial system is under enormous strain. And it's not clear what the global regulatory framework will be. And it's not clear what big financial institutions will look like or how they will behave. And so the very question of where the capital is going to come from and how it's going to be obtained and on what terms, that's a really big question for global companies as well. Third, if you look at the last decade alone, you see a series of global catastrophes that have really surprised everyone. Whether it was 9/11, whether it was SARS, whether it was the Asian tsunami, the Haitian earthquake, Katrina, the BP oil spill, Fukushima radiation, I could go on and on. The point is that we are living in a world, I believe, where we're going to see more really fundamental disruptions. It's part of a more complicated technological setting and part of this interdependency that has grown even beyond our ability to understand it. And so for global companies, this raises some very fundamental questions of how you can look around the corner if you can, how you plan for unanticipated contingencies, how you build resilience into your operations so that you can recover from something you can't really predict in advance. And finally, the fourth trend is that billions of people are entering the world economy. Perhaps 2 billion over the next 10 years will join the middle class. Hyper-urbanization is expanding very, very rapidly. And everywhere there is a demand for a better life, there are aspirations for more housing, more automobiles, more of everything. And the arc of history certainly shows that we have been living in the lab, you take the last couple of centuries, ever expanding global economy. And so, despite all the uncertainties, In my view, it's a very good bet that we are living in an era of enormous opportunity, and that for the industries that you represent, there are some unprecedented possibilities to expand and to profit. The real question is, what happens in the interim? I think I can tell that over a long period of time, what I'm saying about the rising tide is very likely to be true. But there are going to be a lot of surprises along the way. There are going to be a lot of walls put up, some of them very suddenly. And so it's going to be a very bumpy ride. With that, I'd like to start with our panel, and each is going to talk just for a little while, and then, as I say, we'll have a discussion up here to start with. So, Richard, perhaps you could begin.
Thank you very much, Dr. Gartner, and thank you all for attending today and attending MINExpo. So just a few quick facts about Newmont. We are primarily a gold producer. We produce about 5 million ounces of gold a year. We also produce about 100 or 200 million pounds of copper a year. We're based in the U.S., but we have operations around the world, U.S., Australia, U.S. here in Nevada, Australia, Peru, Ghana, Indonesia, New Zealand. We're the third largest gold producer by market cap. Today's value about $28 billion. We're in the S&P 500, the first gold company to be listed on the Dow Jones Sustainability Index World, really a complement to our history of really trying to be environmentally and socially responsible. We're also the only gold company in the world, the only mining company in the world actually, that is actually engaged with our communities on a community relations review, which we conducted around the world in 2008. Published on our website. We've got a number of things we're trying to do to re-engage the community. And as Dr. Gartner said, I think with the political issues around the world, and because mining is so local, that is really an engagement process which we think is important. So one of my tasks today was to talk about our commodity, or our business, and what I see for the future of that. And in light of all the things that Dr. Gartner just talked about, that should be relatively easy. Maybe not. But I was also intrigued by the word authoritative. I think a lot of people in the company who work for me, they know they work for me, but they think they have a lot of authority. So this is a really complex set of opportunities and issues. So let me just talk about gold. I'm going to spend my 10 minutes talking about gold. So gold, is it a commodity or is it a currency? Because if it's a commodity, then like a lot of the other panelists, I could talk about supply and demand, and I will. If it's a currency, we could talk a little bit about supply and demand, but really we're talking about fear and safe haven. So think about those things as I go through this. Gold, is it a commodity? Is it a currency? How is it trading today? I'd just indicate part of the answer, more like a currency than like a commodity. So just a few facts about gold. It's very rare, very difficult to find, difficult to discover. In fact, so rare that if you took all the gold ever produced in the world from the inception of our beginning as humanity until today, it would fill 2 Olympic-sized swimming pools. That's it, 2 Olympic-sized swimming pools. So it's very rare. It's also dispersed. So we don't find gold in seams. We used to find it in nuggets, and now we find it in grams per ton. So it's getting more difficult to find, more difficult to produce, more expensive. Gold, if you haven't looked lately, has been on an 11-year bull market run. And why is that? Partly because of its commodity needs, because we see an increased demand for jewelry in particular and investment, but also because of the currency aspect. But an 11-year bull market, sounds like it's about time to get off that bull market. I will tell you by the end of my speech, I think we're just in the middle of what will continue to be a very bull market for gold coming into the future. So, why do I think that? Talk a little bit about supply. So this year, actually, we will probably set a record for gold produced from mine sites. And industry estimates, last year we produced about 2,800 tons of gold. This year we'll probably produce almost 2,900 tons of gold. That's TONNES. So that sounds like a pretty good supply of gold, but when you look at that supply of gold versus the total amount of gold above ground today, 163,000 tons of gold above market, or above ground rather. So what you can see is that mine production is actually a very minuscule part of all the gold that's available in the world. Why is that? Because gold is one of the most recyclable metals in the world. So almost all the gold produced is still with us. So that means that mine supply is less than 2% of above ground stocks. And if you think about that relative to the iron ore market or the copper market, where inventories are measured in weeks and months, and you think about that inventory of gold sitting above the ground, what is it that really sets the price? Is it a commodity? Is it a currency? So if you look at that production stream, production balancing out the demand on the production side, we also see recycled gold, and recycled gold has generally been about 10% of the market. On the supply side, mine production about 60%. And these are figures for a 5-year average for averages from 05 to 10. And then official sales used to be about 30% of the market. So what has changed in the last couple of years to really set a trend for more investment? Because investment has been the largest growing component of gold demand in the world. And what we have seen is a greater than 50% increase in the central bank, 500% increase from 2010 to 2011 in central bank purchases. So they used to be a supplier, now actually they're taking gold from the marketplace. That's a remarkable change. That plus the emergence of the ETF has really generated demand for our product in terms of investment. So if you think of the rest of the demand side, about 61% of gold has traditionally gone into the jewelry market. So middle class growth is important to us. China, India, as the markets start to slow down, what happens with jewelry is an important part of what goes on with gold. But importantly, not as much as it used to be, because while jewelry used to be 60% of the need for gold on the demand side, and investment was about 27%, in 2011, the figures were remarkably different. Jewelry was less than 50%, China still being the largest consumer of gold as well as the largest producer. The largest consumer last year. Now China looks like it will be. Investment has gone to almost 40% as well. And then the balance is really into industrial commodities. So very much driven by jewelry, very much driven by investment demand. So why is investment demand changing? That is the question that really leads to the currency or commodity debate. And what I will tell you is that as of right now, over the last couple of years, it really looks like supply and demand, while important, as I said, 2% of mine production, 2% of total supplies. What really sets the above ground price of gold is what central bankers and the rest of us think about gold. So why do we hold gold? It's precious. It's also a safe haven investment, and it trades like a currency on many days, and especially days as we've seen over the last couple of months. With a crisis in the ECB, where Draghi has said he'll do whatever it takes to keep that economy going. Here in the United States, where Bernanke has said QE3, or as some people have dubbed it, QE infinity, continual inputs into currency supply. And we've recently seen the Bank of Japan, who has announced about $125 billion for a country a third the size of the United States, $125 billion of money supply injected into their economy because they don't want weaker currencies coming in and dominating their currency. So how do we solve the world's problems of today? Austerity, taxes, or reflation? If you're running for election, I would suggest to you, Austerity sounds good but difficult to do. Raising taxes sounds good but difficult to do. We're on reflation, which is what we're seeing in the market today. The Fed's mandate has been to maximize employment while minimizing inflation. I would say with their forward projection of keeping interest rates low, they have decided to really maximize employment. And that means that we're going to see more currency, we're going to see a weaker US dollar, a weaker euro, and a stronger gold currency. So with monetary policy really dictating where the world is headed in terms of currency strength, I think that gold is really a great place to be. A challenging development market for gold is the last thing I'll talk about. As we look to the supply side for mines, although many industry prognosticators suggest that mine supply is going to go up from its record level in 2011 and probably a new record in 2012, I would say watch those numbers carefully. Why? Partly because of what Dr. Gartner talked about. We're seeing political influence as well as resource nationalism really come to impact companies like Newmont, where we have operations around the world. Each government has a different view of what they want from mining. In addition to that, the time from exploration to discovery has increased from a decade ago from somewhere around 10 years to approaching 17 years on average. So even when we have a discovery, 17 years to put it into production. And then lastly, exploration results. What we're seeing on the exploration side, while spending more money than we have ever had to spend in the industry, we have not had a significant discovery of 5 million ounces or more in the last decade. And as a result of that, it's going to take longer and it's going to be more difficult to put mines into production. Finally, cost inflation pressures. We're seeing an industry which is impacted by a number of things, but importantly, lower grade and higher strip ratio as our mines get older and as prices go up. So that confluence says to me it's going to be more and more difficult to produce gold, to find it, unless we have an innovative change, which we all hope for. But as we see that in the environment of supply and demand, I would say supply is going to be challenged. Demand is going to continue to grow over time as the economies of the world grow. But finally, over the next several years, I'd say at least for the next half decade, currency is going to dictate the day for gold, and that says gold's going up. So thanks.
Well, good morning, everyone, and thank you for allowing me to spend a few minutes talking a bit about what's happening in terms of the coal sector, particularly on an international basis, and what some of the trends that we see and what some of the challenges we see going forward. First, just a few minutes on Peabody Energy. For those of you, we're the world's largest private sector coal company. We're the only global pure play coal company in the business. Operations obviously here in the U.S., Australia. We've got development projects in Indonesia, in China, Mongolia, as we continue to build out our global and international footprint. And we've got probably the largest trading platform globally in the coal sector, with offices in St. Louis, London, Singapore, Newcastle, Australia, and offices also in India. Over the last 8 years, I would say if you went back and looked at our business 8 years ago, 1% of our earnings came from outside the U.S. Over the last 2 years, 50 to 55% of our earnings base has come from our international platform. So a significant change in the nature of our business. So I want to talk a bit about what's happening in terms of global coal, some of the demand trends, and what we see are the demographics to focus on some of the comments we heard earlier about what's happening with these global industrialization and urbanization around the world. You know, we really are facing times of great change and challenge in our industry. We see that in recent months' activities, and clearly the mining sector has not been immune to what's happening in terms of global economic activity.
Number one, jobs in the economy continue to be the concern. I think that's true in any political jurisdiction anywhere around the world, and certainly with what we see here happening in the U.S. So with that in mind, I think it's very important that we never lose sight of the critical role that the mining industry plays in this global context. Producers and suppliers are always the first link in the commodity supply chain that sustains economic growth and security on a global scale. Low-cost energy provides the backbone of a strong economy, and despite our near-term challenges, I will tell you that the outlook for coal in particular remains very, very strong. Global coal demand is growing. The seaborne market for coal is growing most rapidly. And as emerging nations continue their extraordinary development journey in the decades to come, there's no question that coal is the commodity that will provide both the energy needed to power these new cities as well as the input into steel production to build these new urban centers. So before we move to the panel discussion, I want to talk about two themes here. The first one is my view that our priority is global energy access. Energy access is a basic necessity, it's a human right, and it fuels economic growth and security. Has been there for a long time and will continue to be that way a long time into the future. And then two, despite the near-term headwinds that we're seeing, the global sector over the long term, I'd like to show you how strong those fundamentals remain. So if you look in the developed world, few of us give secure energy access more than a passing thought. We expect when we throw the light switch, the lights will come on, the air conditioner will run, refrigerators will run. When these 5 million iPhone 5s that have just been bought over the weekend, they need to get plugged into the wall, that they'll get recharged every 8 hours, or maybe the battery life is a little longer these days. But we take it for granted that all of that's going to happen. And we expect everything to work, and we expect it to work all the time. In fact, our lifestyles really depend upon it. But if you really look beyond the ease and comfort of our daily routines, and you enter the villages of sub-Saharan Africa, or Asia, or elsewhere, where families need electricity for their most basic needs: clean water, warmth, refrigeration, and light. More than half the world's population lacks proper energy access. And in fact, 1.3 billion people in the world today have no electricity access at all. So the face of energy poverty is just way too stark in today's world, and it's too human. Beyond the poor living conditions, the lack of education, and other obvious ills, we lose 1.5 million people every year to the effects of energy poverty. These are tragic conditions. We cannot continue to let them go on. I continue to state that the greatest crisis we confront in the 21st century is not an environmental crisis, which has been predicted by man-made computer models. It's the crisis of energy poverty that we have in front of us today. And when you think about how long ago as a world we put somebody on the moon, and the fact that that many people today have no electricity access, we don't have our priorities in the right place. Energy is a human right, but it's also a rapidly rising need. Every tenfold increase in electricity is linked to a tenfold increase in longevity. It's one of the reasons why longevity in the developed world has escalated and grown so rapidly. Electricity provides a better living standard, higher literacy, and a much healthier population. This slide will show you the profound correlation between electrification and improvement in the UN Human Development Index. To reach the upper levels of the index, people need at least 4,000 kilowatt hours of electricity per person. Even that is conservative when you consider the European Union, which uses about 50% more than the 4,000 per capita. Now at Peabody, we've developed a plan which targets energy access for all by 2050. And I will tell you, coal is the only sustainable fuel with the scale to reach global energy access. There's another strong correlation here between expanding coal use and growing economies. A rapid rise in the world's use of coal-fueled electricity mirrors the global rise in GDP. Since 1970, coal use has increased approximately 300%. And coal mining is always the first link in a global supply chain that fuels economies and improves the quality of life for millions. It is an economic miracle globally that's been powered by coal. Now, this year's MINExpo represents the largest single assembly of mining equipment in history, showcases the significant state-of-the-art technologies that are being used right across the industry. Some of the mining industry's best technologies are being deployed to ensure coal's sustainable future. And as the world increases its use of coal, Peabody is investing in and advancing clean coal solutions that will help us achieve our long-term goals of near-zero emissions from coal. But I'll tell you, a major step in the path to near-zero emissions from coal is deployment of ultra-supercritical technology, which is state-of-the-art technology today. These plants are highly efficient and they're very low emissions. Even their carbon emissions are 40% lower on an emissions rate than the oldest plants that are in service around the globe. The good news is about 430 gigawatts of these plants that are in operation or construction around the world. But it might surprise you that China leads this effort, representing more than a third of the world's most advanced coal generating facilities. Let me take a few minutes to talk about the long-term outlook for thermal and met coal. And despite the current soft markets, global demand continues to grow. In fact, over the next 5 years, we see global coal demand growing by 1.3 billion tons, with China and India driving the lion's share of that growth. This demand is comprised of more than 1 billion tons of new thermal coal demand to support about 390, almost 400 gigawatts of new coal fuel generation globally. In addition, we see about 200 million tons of additional metallurgical coal demand to serve an estimated steel production growth of 20% over that same time frame, as the rest of the world industrializes and urbanizes. And we're already seeing new generation and steel plants being built in China and India. Importantly, they're being built along the coast, so they can source their coal needs from a global basis and trade along the seaborne platform. Now, China's coal imports have grown dramatically over the last several years, and are projected to double from 2011 to 2016. That's on top of a 20% increase in 2011 alone. That resulted in their imports of about 223 million metric tons, which was a record. Coal imports into China are on pace this year for another record year. We think exports are likely to rise to somewhere around 280, 290 million metric tons. China's imports are being driven both by practicality and strategic purpose, which is a trend that we need to watch going forward. China's called for limits on their coking coal production, for instance, based on what it notes as a special and scarce resource. And China has significant upside to its met coal imports as it looks to source met coal from outside of China. China has also been reducing its domestic coal production as it restructures its coal sector into much larger and more efficient operations. Now, if you move from China to India, India was the fastest growing coal importer on a percentage basis in 2011. Coal fuel generation rose 9% in 2011 alone in India. And even that didn't stop 680 million people losing power earlier this year. Thermal imports rose at a far greater pace, evidencing the country's growing need for seaborne coal to satisfy their long-term energy needs. India is building about 70 gigawatts of coal plants that are expected to start up in the next 5 years. That's another 250 million tons of annual coal demand. And India has focused $1 trillion on infrastructure spending to try and significantly expand their ability to deliver energy to their existing economy, but also to lift more and more of their citizens out of poverty. Now, here in the U.S., coal continues to be the only sustainable fuel that offers the scale, reliability, and cost to suit our long-term energy needs. In the U.S., we've seen a temporary fall off of coal use this year, with projections of a rebound in 2013. In fact, the EIA just came out with their forecast for 2013, and they anticipate an 8% growth in coal demand and use in the U.S. next year. But globally, the International Energy Agency has forecast a robust 65% increase in global coal use by 2035 under their existing scenarios policies. Under this forecast, coal becomes the largest energy source in the world by 2035, surpassing oil. And the growth in energy from coal would be 30% greater than natural gas. Not what you intuitively hear when you read the papers or listen to the news. So despite the long-term positive outlook for coal, I don't want to leave the view that the industry does not have its challenges. Nothing is more important in mining than safety, and we must strive for continuous improvement. This year, NMA has launched its Core Safety System, which is a groundbreaking program designed to prevent accidents before they happen. Core Safety will help us achieve the first ever industry-wide goal of 0 fatalities and a 50% reduction in injury rates within a 5-year period of time. But we must also maintain our license to operate amid an increasingly complex public environment. Recent regulatory reforms have made it more important than ever that we advocate for a balanced energy policy, for a balanced framework, one that encourages and rewards greater use of coal, but in a low-carbon way. We advocate all forms of energy because that's what it's going to need to power the global economic activity for the 50-year time horizon, not for the next 2-year time horizon. We must compete for access to resources, and in an industry, we must attract, develop, and retain the talent pool we need for the next generation of mining. And last but not least, we need to stay competitive. Despite the increasing cost of infrastructure and the technical complexity of the next generation of operations. So I'm confident that the mining industry and the coal industry can address and surmount these challenges. As you can tell, I'm pretty excited about the long-term trends and developments for the coal sector in decades to come. Contrary to the news headlines, coal has been the fastest growing fuel for the past decade. Fastest growing fuel for the past decade. And it's projected to be the largest energy source in the world by 2035. That's a far cry from an industry that some would say is no longer needed. The long-term market remains strong. Coal will continue to power the global economy. And I think with that, we'll save the rest for the session. Thank you.
Good morning. Great to be here with everybody today. Freeport-McMoRan Copper and Gold is a global operator and the largest publicly traded copper producer in the world. We're excited to be with our colleagues here at MINExpo, and we specifically want to call out Greg Boyce and thank him for his past chairmanship here of the National Mining Association, and Hal Quinn and his capable team for putting on this outstanding event here today, and all the great work that Hal and his team do representing our industry in Washington, D.C. We continue to see solid long-term supply-demand fundamentals in the copper markets. Consumption continues to grow. China, the world's largest consumer of copper, continues to grow, albeit at a slower pace. USA is growing slowly now. Auto production particularly is a bright spot that we see in the copper markets right now, one of our better markets in the country. And Europe is soft, as everybody knows, but you combine all of that and the consumption of copper is still growing. You contrast that with the supply end of the business, which is challenged these days. It just becomes more and more difficult for existing operations to produce at the historic levels that they have. You see labor challenges at existing operations throughout the world. In general, ore grades are declining. We have ever-challenging situations with mature operations, including depth of the pits or the underground mines, geotechnical constraints, and aging infrastructure. It is also becoming more and more challenging to bring on new greenfield operations in the copper industry. Engineering and construction resources are constrained. Permitting is very complex. There are water and power availability challenges, and capital cost escalation is a big challenge that the industry faces right now. As a result of the limited supply response, the market is essentially balanced this year. We've got roughly less than 1 week of copper consumption held in exchange warehouse inventories today. While there are stocks bonded in bonded warehouses in China, these two are limited, representing less than 2 weeks of consumption. And we see these circumstances continuing. Even if world copper demand grows modestly at 2% annually, supply will be challenged to keep pace with that growth. Freeport-McMoRan is well positioned with 120 billion pounds of copper in reserves, 46 billion of which were discovered in the last 5 years since Freeport and Phelps Dodge combined. We are aggressively pursuing significant brownfield expansion projects at our Cerro Verde operation in Peru, at Morenci here in Arizona in the United States, and at Tenke-Fungurume, our new operation in the Democratic Republic of Congo. Those expansion efforts will add 1 billion pounds of copper production annually to our total. So we're going to go from essentially 4 billion pounds annually today to 5 billion pounds annually over the next 4 years. Thanks to our sizable reserve position, we have additional brownfield expansion opportunities at our other operations here in the United States, as well as Chile, Democratic Republic of Congo, and in Indonesia. And we're evaluating all of those opportunities and prioritizing them. Generally, brownfield expansions have lower execution and social risk than greenfield opportunities. So again, we see the combination of all of those circumstances, the markets, our particular company's position, just makes a bright future outlook for us. We think the future is bright for copper, and our company has the potential to grow and provide world markets with the copper they need to develop and prosper. So thanks for being here with us today.
At Joy Global, we actually are the connection point between all the mining companies around the world. We operate a business that makes mining equipment for both surface and underground mining, and we operate in all the mining regions around the world, all the regions in metals mining, minerals mining, and coal mining. So we are the common connection point. We also run a business that is really focused on working closely with the customer to improve their mining operations. And as a result, we design, construct, install equipment for our customers, and we take on contracts under our lifecycle management program to maintain that equipment over its working life. So there's a very strong relationship over the long term with our customers and working with them to develop value creation for their mining and mining operations. As we look at the industry on a more broad perspective, the global mining industry is really vital to economic development and economic growth. I think it's the start of the economic value chain and has a very key position in growth and development as a result of that. The mining industry has grown at double-digit rates over the last decade and more as we've tried to grow production to keep up with the demand coming out of the emerging markets as they industrialize and go down a path of urbanization and industrialization. Intensity curves are often used to measure the consumption per capita as economies industrialize and they go down the path of industrialization. So we look at metals intensity curves, we look at energy intensity curves, we look at minerals intensity curves. And after 10 years of strong growth in the emerging markets, they still are very low on those intensity curves, very low. And as a result, we still believe we're in the very early innings of the industrialization of the emerging markets, and more specifically of China and India and developing Asia. To put that in perspective, if I look at China today, it's about where Japan was in the late 1950s or early 1960s. So if we take China and we take India and we expect them to catch up to Japan over the next 20 to 25 years, that's going to generate a compound demand growth rate for commodities of over 4% a year over that period of time. So there's a lot of runway ahead for the mining industry. But mining's got to do more than just keep up with demand. It's got to become more efficient and more productive in the mining operations. We see ore grades declining, and we see major new projects moving into areas that have higher political risk and higher cost, in particular, much higher cost to build infrastructure around those mining operations. And yet, at the same time, we've got to contain our cost of the commodities so that they support rather than undermine economic growth. The mining industry has got a safety record that is much better than most other industries, and yet we're on the pursuit of driving the safety record even better and improving that safety record. The core safety program we have at NMA is one of those programs to do that. Ultimately, we're going to drive safety in this industry to zero harm. We have to overreact to safety to eliminate the negative perception that that still has on the industry. Industry is also better, the reality in our industry is also much better than the external view on environmental impact, and we continue to make investments in improving the environmental impact of mining operations. We make investments to reduce the, or to improve the fuel efficiency in the equipment we use in mining operations, and we have world-class standards for mine reclamation. So we're doing a lot of things in mining to lower our environmental impact, and yet we still need to do more because the reality of what we're working on and the progress we're making and the optics both matter. As a result of that, the mining industry is making major investments in new technologies to improve the safety, the efficiency, and the environmental impact of mining operations. And here at MINExpo, you can see 860,000 square feet of exhibits of that kind of technology on display. It's a tremendous statement of the impact that the industry is making on investments to drive for improved productivity, improved impact, and improved safety. So the industry is stepping up and is making the investments, and you're seeing that in MINExpo today. As a company, Joy Global is really focused on developing technologies and equipment that can support our customers' operations, and we're bringing that to market today. We're bringing to market systems that streamline and improve the efficiency of mining processes. In the process of doing that, we're developing systems that require fewer pieces of equipment and fewer operators, and that's improving safety and productivity in those processes. We're also working on automation that's removing operators from the mining phase and taking them out of harm's way with a significant improvement in safety as a result of that. And we're developing equipment that are providing new solutions to old challenges in the mining industry. For example, we have under development, and we'll talk about at MINExpo, a loading shovel that for the first time will be able to 3-pass load 400-ton haul trucks and significantly improve the efficiency of the fleet of those haul trucks. We'll also have on display a low-seam longwall that will allow longwall mining to go down to a mining height of 1.3 meters and move into seams with a more efficient method of mining than we've ever been able to do before. So all of those things that we're working on are unlocking value for our customers by improving the mining process. We have these things coming to market not because we're sitting around trying to think of new things we can put into the revenue stream, but because we're working very closely with our customers to help them debottleneck their mining operations and find ways to improve and make their mining operations more efficient. And it's that combination, that strong partnership between the equipment side of the industry and the producing side of the industry that makes mining a strong, sustainable industry. So with those remarks, I'll turn that back over to Professor Garten. And
well, I was taking notes as each of you was speaking, and I wanted to maybe pose a few questions to all of you, and just it'll be a short question, maybe we can get a short answer. I think one thing that's certainly common here is that you're all very global and increasingly so. And so the search for scale, the growth strategy is really at the center of what you think about all the time. So I just wonder how you think about the balance between growing organically and growing by acquiring other operations. Is there a common theme here, or is this very unique to each company? And Mike, maybe I'll just start with you.
Thanks. Well, I think that for us in the equipment business, both have a very key role. Certainly, organically, we're developing technologies that play a key role in improving the mining operation. So the application of those technologies is giving us new revenue streams at the same time that we're helping our customers improve their mining operations. And yet in our portfolio, we have areas where we can add to our portfolio, and those additions can become very efficient if we do that acquisitively. So the leverage we get off of adding products that are very complementary to our current product line can be pretty significant to our own business, but also allows us to be more effective and more efficient in serving our mining companies. So we generally want to deploy our R&D investments in new technologies and look at acquisitions where we don't think that we can get a highly differentiated advantage from the R&D efforts.
Right.
Our strategy is organic. We have great expansion opportunities at our existing operations right now, so that's our prime focus and what we're all about.
Okay.
I think we've grown in both ways, both organic developments as well as M&A. Most of the M&A focus was where we wanted to reposition our platform with a large operating base in Australia. We had to go and acquire that reserve base in order to then provide a foundation for organic growth in Australia. I think we have a natural affinity to organic growth because you typically know the reserve better and you can plan for it accordingly. But there are times when you have to do M&A to reposition the portfolio and provide a platform for organic growth.
So growth or profitable growth is always the trade-off between acquisitions and internal development. And paying a premium to other people's shareholders is only worth it if you can get a profitable return with that acquisition premium. And I think in the gold business, it's kind of on and off. So Newmont, like Peabody, has grown through both historically, probably like Freeport as well historically. We tend to favor our internal organic projects when we can find them, but the industry is very challenged. So if we see somebody else fail, perhaps we can step in and help them out with our scale, but we have to be differentiated about that. Additionally, in our business, it is important to find exploration, probably more so than others on the stage here. Copper and coal generally have longer term reserve lives. We have pretty short reserve life. So we're always looking for other opportunities. So we have the exploration stage where we might do acquisitions as well as the productive stage. So will we? Potentially. Has to be return oriented. We'll probably look in both areas from exploration all the way through production.
So Richard, you mentioned inflation as I think I'm right, as a core concern, pointing to the activities of the key central banks and how in unison they all have really reduced the cost of money to nothing or even less. And if you look at what they're saying and you look at the situations that they describe themselves, this is not the flavor of the month. This is going to go on for quite a while. So what I'd like to ask all of you is, how do you think about inflation as a long-term prospect? Because after all, when you think about any economy, the global economy, there's nothing more fundamental than whether prices are going to be stable or whether they are almost inevitably on the rise. So what do you think about it, and what is the implication? What does it mean for the way you operate?
So over the last 5 years, mining companies have generally seen their operating costs go up about 15% compounded, even in a period of what you would describe as low inflation in the world. So surprising. Gold mining companies, in general, we don't get to set the price of labor or really the price of our input commodities, because we're a pretty small sector relative to the rest of the mining world. When you look at iron ore, copper, coal, the demands for iron ore around the world really do help set, particularly in Australia, what the price of labor is, not the price of gold. So as we see that, we are really a inflation taker, if you will. And as a result of that, we have to manage the rest of our costs as efficiently as possible. I do believe inflation will be low for the next few years, at least in the world, but I continue to see that with the kinds of demands that we're seeing in copper, coal, and gold, that we're going to continue to see mining inflation impact our input costs. So what do? Manage costs carefully, deploy capital in ways which try to ensure that we get a return, or don't deploy it and give up unprofitable growth to focus on profitable operations.
Greg?
Yeah, I think very similar to Richard's comments. I mean, we have a unrelenting focus on reducing our cost structure, because you always want to structure all of your operations to be at the low end of the cost curve so you can survive the variabilities in the marketplace. I think from a coal sector, because we are so heavily dependent in the marketplace on the demand for electricity and the demand for steel, which correlate very closely to GDP, our concern long term with inflation will be not only the cost base, but what it does to market demand for thermal coal and for metallurgical coal. So obviously we would like to, there's a lot of work going on right now. A lot of the reasons why we're seeing all of this government injections of funds is to try and stimulate economic activity. We clearly want to see that happen, but then hopefully there can be a balance in terms of how much inflation does come in based on everything that's been done today.
Right.
We do everything we can to manage costs, both operating and the capital costs of the new investments that we're working on, and then focus on demand. And it's all about the demand for our product and creating the volumes to feed those markets, or trim the volumes back if demand goes down.
Yeah, we probably look at the inflation from two different perspectives. One is we really try to get leverage out of our business, particularly in our overhead cost structure, and try to build a business that maintains a low cost base so that we can be efficient through the phases of the industry. But the other thing we do as an equipment manufacturer, we build equipment that's built for purpose. So the best way we can provide value for our customers is to make that equipment more efficient in the way it operates in the mines, rather than trying to reduce the cost of equipment. We need to build robust equipment, high reliability, because it's a mission critical applications. So we're more focused on how we can make that equipment operate more efficiently in the mining operation and get value to our customers in that process.
So the third thing that you touched on a little bit, but I just want to pose, and this has to do with the talent pool. The acquisition of talent, the retention of experienced employees, the development of talent for a world that is obviously much more technologically sophisticated. And since you're all very global, this is actually a global talent pool that you're looking at. So Red, let me start with you. How big is a challenge? How big a challenge is this, and the panoply of things that you think about and work on? And what would you say is the single biggest talent-related challenge you face?
Well, the talent is huge in our industry because we have an industry that requires heavily on empirical experience. So you can get training in university, but you still have to have quite a bit of knowledge, operating knowledge in the mines to really understand and be able to deploy what you've learned in your educational background. So talent's critical to us. We do two things to try to maximize the benefit of our people. One is we're working on remote monitoring, remote diagnostic technologies that will allow us to monitor the equipment with people not necessarily in the mines, but people back in a control center, so we can attract people in ways we couldn't have in the past. And the second thing, we really do leverage our global resources. So we'll have engineers in the U.S. working on a project in Australia and benefit from that capability. But ultimately, the biggest challenge we face is the fact that we have a lot of very experienced people in our business that are getting closer to retirement age, and being able to replace those people with a new workforce, and still requires a lot of, basic fundamental skills that are very strong, but also a lot of experience that goes along with that is undoubtedly our biggest challenge.
Yeah, and yeah, certainly it's a challenge, but we think that's part of what makes our company vibrant and active right now. There's a lot of training going on, lots of opportunities, both domestically and abroad at our operations. We see great engineers coming out of Peru and Chile, and we have great engineers out of Indonesia that have all been trained and educated in those countries. We're proud of the hiring ratios that we have of nationals in those countries, and you even see them transferring in and out of our operations here domestically. A lot of internal training that goes on, and we just see that as tremendous opportunity and excitement for our employees. It's a good tension to have, and lots of opportunity, and we're working at filling the needs that we have every day. But we're not worried about it. They're there.
They're there.
Yeah, I think as you look at what's going to be needed over the next couple of decades in this industry, and you look at what I would focus on are kind of the geosciences, whether it's the geologic engineering, geotechnical, mining engineering. I mean, all of these skill sets that are absolutely critical to our business. That's not to say, electrical, civil, mechanical, all the other engineering isn't critical, but there is a specific set of core skills that we need, all of us, to continue to operate our businesses. So some parts of the world are getting it right in terms of developing that. I think in the U.S. we have to watch very carefully. We all partner with the universities here that have those degree programs. There are places like Australia where there just is not enough, and you have a bit of a swirling pool of folks. So I do think it is a long-term challenge for those unique skill sets in this industry. Operations are getting more complex. They're getting deeper if they're underground. They're getting deeper even if they're surface. I mean, and the equipment. I'm sure even in Mike's area, when you start looking at mechanical engineers and product engineers that can build the massive equipment that we need and the sophisticated equipment that we need in our industry, I do think it's a long-term challenge to attract folks into to go through the educational process and then come in. Once we get them, we all have great programs to keep them. You could go to any of our companies and hire those folks, and they would be tip-top in terms of their training. But it's getting them in that's the challenge.
So in a sense, we're probably speaking to the choir. I mean, all of you get the mining business. You're here because it's part of your life. You understand the interesting impacts of mining around the world. I would say in the 90s, we missed a whole generation of people who decided to go into technology and banking. You might ask yourself, how's that going for them? And I guess one of the things that I would say is that I think the mining industry is really an interesting business, but now we're starting to see people come back to the industry, younger people come into the industry, but it takes programs. Like Red, I'm not worried, but I'm not worried because at Newmont we're actually making investments to try to make sure we attract people. So I like to tell people that we have about 500 mining, I don't like it, but these are the facts, 500 mining engineers at Newmont who are retirement eligible in the next 5 years around the world. We could hire every mining graduate, for instance, in the United States who has a mining degree, and we couldn't replace those people. So do we have a challenge? Absolutely. But one of the great things about our business, people love working in the business. I think we can retain those people. They can stay around and train other people who, as Mike was saying, when they come onto the job, we need to help train these people. But we're enthused about it. And just as a final headline, we have 2 candidates running for president who both bear the credentials of a Harvard Law degree. Sounds great if you want to run for president, but I'm telling you, if you want to be in a business that makes money, if you're young, your children want to do something, a recent article in the paper said a mining degree is worth its weight in gold. And in fact, they compared it to people earning money from Harvard versus the South Dakota School of Mines. Guess who wins? South Dakota. So.
I'm thinking now about the competitive environment. You're all painting a picture of, I would say, a very bullish picture over a long period of time, and also a huge amount of action that is taking place in emerging markets. We all know that in many of these countries, the tradition of private companies, or let's say publicly listed companies, is less developed than it is in ours, and that's state-owned. State-owned enterprises are, by some accounts, on the rise, especially in the natural resources area. So I wonder if any of you want to just address this question about competing with state-owned companies and the degree to which this is a growing factor on the competitive landscape, or the degree to which you basically have seen it, know how to deal with it, and it's not a big concern. I'll ask you, Red.
Well, certainly in the copper business, you know, the #1 producer in the world is Chile's state-owned company, Codelco. We're partners with them at one of our operations in Chile, so we see them as well-respected colleagues and leaders in the industry, and we enjoy working with them. I think the broader tension that you're speaking about is just the ongoing work that we do with all of the governments where we live and work, whether it's the United States or anywhere else, and the balance between taxation and various, whether it's royalty or other revenue generating aspects for those governments. What's the right balance? How does everybody grow and prosper and benefit from that going forward? And we work on that every day.
I'd just add to that I think the sector of the market you're talking about is really important. So, for example, competition across a natural resource which has a pretty diversified base, it's probably less worrisome to have a competition between state-owned and privately owned, but more collaboration to ensure things like safety standards get lifted. People cite China and some of the safety issues there. I can tell you they're working hard to improve their safety. We can help them. But when we look at other areas like rare earth, for example, I think there really is competition, and that's a really fierce competition about securing what is even beyond precious but rare. And I think with that, I think we do see the emergence, of resource nationalism, whatever you want to call it, not just on the continents where state-owned entities actually work and operate, but where they want to go. So when you go to Africa, there are a lot of Chinese who are looking for which ore body and which kinds of ore and materials and minerals that they want to own next. And I think that's a key thing for us to keep an eye on, because I think over time we do want to compete fairly, and we want to make sure that we collaborate to lift the whole industry up, and industry standards can get set through that collaboration. I don't want competition to become so fierce that we sacrifice environmental standards or we sacrifice people standards. And I'm not saying that's happening today, but I think we have to be really careful to stay on top of that.
Actually, I have several questions from the audience, and let me stay on this theme because there are a couple of questions on this on this subject. And I think if I'm reading between the lines here, there is a question about the degree to which American companies are at a disadvantage given their safety standards and the environmental goals. Are you at a disadvantage in competing with a lot of foreign companies, particularly companies coming from emerging markets? Now, I'm trying to separate the diplomatic answer here from what's actually right, but
well, he'll do right, I'll do diplomatic.
No, I know.
Well,
I realize it's a sensitive issue, but can you address it just in such a way as, is there a gap between the way that American companies are compelled to behave, either because of our laws or because of the way that we have been brought up, or in fact, is there a lot of opportunity here to narrow the differences with collaboration? Yeah,
well, I think part of what the premise is because they don't use the same practices internationally, would they have a competitive advantage? And I would tell you that our experiences, I think all of us here, would be just the opposite.
Yeah,
that the safest operations and the ones that use the best environmental standards have a management quality to them, that we have the highest efficiencies, the most productivity, the least variability in the operation, which drives us to be the most competitive. So if you advance, we can tell you time and time again, you go into the safest operation, it's typically the best run and the most competitive operation. We see that whether it's in Australia, we see that in Indonesia, we see that in China. So what we're actually seeing is those state-run enterprises are coming to us wanting to partner so they can learn those management techniques because they see how competitive we are even in the world we operate in.
Anyone want to add to that?
Spot on.
We see exactly the same thing in our own manufacturing operations, that clean, neat, orderly translates into more productive, safer, higher quality. And you can make the same argument on quality as you can on safety. The operations that run to higher quality levels are always more efficient than those that have higher defect levels.
And I'd agree with that. I think the difficulty is getting people convinced that that is the right way to go in the longer term, and that's part of our advocacy position, both as a National Mining Association and whether it's the ICMM or other institutions around the world that try to encourage responsible mineral development and responsible mining. I think, though, that we have to make sure that we invest in that and that we show people why that's important, because otherwise you might have short-term profitability trumping what is a longer-term effort to have a more sustainable business. If we don't get environmental right and safety right, we lose our license to operate, and that's nothing anybody on this stage or in this industry wants to do. And I think we have to make investments in that constantly to uplift our performance.
Okay. Another question here has to do with Africa. China came up in your remarks, and India came up, and Africa a little bit, but not so much. I think anyone reading the press is kind of taken by the amount of attention that Africa is getting in terms of its transformation and its future potential. So the question is, from the standpoint of your businesses, if you were to look ahead over a decade or so, is there going to be more focus on Africa? And if so, what are the big challenges there? And Mike, I'll start with you.
We have a significant operation that's based in South Africa, serving the continent. We believe strongly in the resource future of Africa, but we also believe that they have to develop policies that attract foreign inward investment. And right now, there are things that go on in Africa that are exploiting the resource base that they have, rather than using that to attract more investment and build stronger economies. So we have great resources and fragile economies in Africa, and that's not an environment where you want to make massive investments in. So, as we are positioned, we have strong investments there. We're not going to add to those until we see a more constructive environment. But certainly they have the potential from a resource base, they have the potential from a policy base. It's a matter of getting over the hurdle on that.
Minerals are where you find them. We've found them in Africa. Democratic Republic of Congo, we've made a $2 billion investment there. Tinky Fungarumi is our copper operation there. We're now in the process of expanding that. So we're, investing and growing with that country and excited about the prospects in the future.
We're not currently invested in Africa. We do trade coal out of South Africa and have looked at part of the coal developments. Mozambique is a country that is now starting to develop their coal sector. So I think it's probably country by country specific, but I think Red and Richard would have more direct experience in Africa than we would.
So we operate in Ghana, West Africa. Someone once described to me, someone in the international diplomacy arena of the world, more of an expert than I am, that Ghana really is described as Africa for beginners. And the reason for that is it's a 50-plus year democracy, as opposed to a lot of what else has gone on in West Africa. It's been very stable. They're having an election this year like they did 4 years ago, and the winning party won by 2%. And as opposed to a revolution, they actually just had a regular change in government like we would here in the US, without making the B keys stick to each other like they did after Clinton left. But with that, what I would say is Ghana is a very exciting place for us to operate. I think the west of Africa is exciting as well. Here's what I think is the limiting factor there too. I believe it's government maturity. So how do we as mining companies, who are generally on the pointy edge of the spear, trying to help develop nations with the resources that they have, how do we help enable those governments so that they have the capacity to know what to do with the mining royalties and taxes that they're going to receive, to be visible about how they receive them and how they reinvest them into the communities? Because if communities don't benefit and people do, then we're going to fail. Because communities need to benefit from mining, not individual people who somehow take what's taken in by the government and used for other purposes. So that's one thing, capacity building. The second thing is infrastructure building. Greg mentioned it. When you look at Africa, and you look, and Mike mentioned it as well, when you look at the utilization of electricity, it's very high. But if you look at how much electricity is supplied per capita, it's very low. The same with roads, the same with infrastructure, water. So this is an area where the Chinese are actually taking a very aggressive view on building infrastructure first in exchange for what? Probably resources over the long term.
There are some questions here about balancing growth and environmental policy. And I wonder if I could go through the panel and ask you to talk about, very quickly, one environmental project that you have that you're very proud of, that is a bit emblematic of the kinds of efforts that you're putting into the environment, even as you take advantage of growing demand and as the environment is so competitive. So, Red, do you want to start?
Yeah, it's a long list.
Well, just give us one example.
How about under the broad heading of water, which is a precious commodity, precious resource on the planet. We're inaugurating a desalinization plant in Copiapó, Chile. That our Candelaria operation now is going to run off of seawater, renewable resource, and no longer pump groundwater. We just inaugurated a freshwater drinking treatment plant for the city of Arequipa in Peru, city of 1 million people that heretofore have not had running potable water. Our milling operations consume some of the lowest amount of water per ton of any other operations in the industry. So there's some examples of
those are good
things
examples.
we're proud of around water.
Great examples. Greg.
Yeah, I think like Red, I mean, there's a long list, but I guess I would maybe point out two. fairly recently. We entered Mongolia in a joint venture a number of years ago, and there was a coal operation that was at the end of its mine life. Historically in Mongolia, you would have just locked the gate and left. We made the decision to reclaim the first ever mine in Mongolia, and really to set the stage and show Mongolia as they develop their mining rules of the road that you can put together in a life cycle of an operation's life reclamation at that final stage. So that would be number one. Number two, in terms of the use of coal, we are the only non-Chinese partner in a new power station in Tianjin, China, which is designed, it's a gasification facility designed to capture all of the CO2. All of that CO2 will be used for enhanced oil recovery, tertiary oil recovery in the oil fields around the Bohai Bay. So I think we're very proud of the fact that we're the only non-Chinese company there, but also actually producing electricity from that next generation of power facility.
So as I mentioned earlier, we're on the Dow Jones Sustainability Index. We've been there for 6 years. You don't get there without having a few good environmental projects to talk about. Whichever one I pick, I'm sure somebody at Newmont will say I picked the wrong one. But because we're here in Nevada, I'll pick one which combines both water, as Red said, one of the most precious natural resources in the world, as well as biodiversity, which I think is one of the bigger challenges. Newmont really led the way through one of our employees here in Nevada, as well as working with some people in Denver, to come up with an approach to save a trout species which was dying and really being overrun by cattle and the influences of cattle and some mining into a water source. And basically by coming up with an approach, we have really rejuvenated that which could have been an endangered species, and we've now really transcended it into a readily available trout, which is really done great in this new habitat right here in Nevada. And I think that's a testament to our willingness to think differently from a scientific perspective, as well as how we utilize our land. And it is our land that we own, that we really want to make sure that we preserve that for everybody in Nevada here. So that's really one of the things that I'd say.
Okay, we're coming to the end, I think. I'm going to maybe pose one final question to everyone. And I hope this isn't unfair, and it's certainly not, I'm certainly not attempting to be partisan, but we have a big election coming up. And it's actually quite interesting because you look around the world this year and next year, there are lots of big political transitions. There's a big one going on we just had one in Russia, there's a big one going on in China right now. Lots of changes, I think, coming up in Europe. But we've got one here. It's obviously, very much on everyone's mind. And my question is, once it's over, regardless of who wins, tell us the one thing that you hope we could think about happening that you think would be good for the industry. Okay, good in the sense that it removes some uncertainty and the ship moves in some direction. Again, regardless of who wins, because it's not just about one person, obviously it's about the Congress and everything else. What would you hope that would happen, let's say, in the first 2 years of any new administration that would make you feel the industry's on a firmer footing with all the economic and social benefits that you've all talked about that the industry serves? And Greg, maybe I'll start with you.
Yeah, I think when you look at the energy industry, and particularly when you look at coal, I think whoever wins, and I thank you for not asking me for a preference, fundamentally the biggest change that we could get in this country is if we could get an energy plan. We do not have one. We've never had one. And when we look at China, we look at some of these other countries, they're looking at 50-year plans, because that's the nature of the investment in the energy infrastructure. And so if either, whatever administration we have next, if we could actually get a long-term energy plan, how are we going to supply low-cost, competitive, reliable energy to grow the U.S. economy and do that with a balanced energy approach that doesn't have unreasonable expectations around how quickly exotic technologies can be brought in. It provides a platform for all of the energy technologies to grow. That would be the single largest thing to help provide some certainty for the energy sector in this U.S. and particularly for coal. I think we'll also send signals to the global economy that there's a recognition that we cannot get from point A to point B in terms of long-term economic growth for the world, let alone the U.S., without embracing the energy resources that we have.
Great. Mike, I'll go to you.
For us, I mean, I think that we would look for a world that, move from disruptive regulation to continuous improvement. We run our business on the principle of continuous improvement. As we've grown our business, we've continued to improve the quality of our business, the bottom line performance. And over the last 10 years, we've developed really world-class levels of performance by doing that over a steady, focused period. And we knew where we wanted to go. We were patient in getting there over a longer period of time, and that's really benefited the business and allowed us to be able to deliver those results consistently. I'd like to see us move from regulations that tend to disrupt the economic balances in our economy and move to ones that incentivize incremental improvement. So as we grow and as we add new capacity, do that incrementally at higher standards, but don't be disruptive and create so much uncertainty that reduces the incentive for investment in economic growth.
Okay, Red?
Well, we're rooting for growth and development and people to prosper around the globe, open markets. I think if you look at the trends over time, that's exactly what's gone on, whether it's this country or others, and we're very optimistic that we're all going to continue to do that, and we work hard every day to work with all the governments that we're involved with, whether they're here or around the globe, and make those outcomes the best they could be.
Richard.
So I'll just build on Red's comment, because I think when I read about the election, I read about something called the appeal quotient. Which candidate has the higher appeal? I actually wish we could get to something called the collaboration component. But what is the collaboration that somebody could bring to the office? Because right now, as Mike said, I think we've devolved to regulation instead of legislation. We've devolved to court cases instead of resolution, the way politics, I believe, should be done, and the way lawmaking should be done, which is collaboratively. We prosper on the edges, we think, but actually we just reach loggerheads. So what I would say the biggest change that any candidate could bring, whether they're the president, a senator, or in the House, is to bring us a desire to collaborate together to come up with better ideas. And in mining in particular, it would look like, could we get speedier regulations, not worse, just faster? Could they be predetermined so that legislators, regulators, courts have to enforce, but they enforce in ways that we know and over scheduled time periods so we know what to expect? Why? Because we can put people to work. We can put people to work here in Nevada if we could open our projects earlier, if we could have more visible regulation, and if that regulation was done under legislation instead of, the way it's been happening over the last several decades, which is just more and more regulation. I'm not opposed to regulation. Just tell us what it is and then react to it in the right way, and let's all work together. Because I think that does help spur the economy. We collaborate clearly as companies to up our standards, whether it's safety, environmental performance, how we invest in the business, where we work together with governments. Could we just work above ground with everybody on politics to try to collaborate better? I think we'd all be better off on any number of issues.
And Hal, let me ask you if you would like to have the last word, just in terms of...
That question or in general?
In general.
Well, Dr. Garten, thanks for taking us through this conversation today. It's excellent presentations, great insights. My takeaway is that for our business, the fundamentals and long-term fundamentals are strong and compelling. If you're in this business and you're patient, persistent, and disciplined, you'll be richly rewarded. which brings me to the MINExpo. If you're here today thinking about your projects tomorrow, it sounds to me like you better get online quickly to make your orders because you don't want to be stuck waiting on delivery later on. So with that, let's thank our entire panel and our moderator.
Good job.